Hello everyone, this is Sunko, the Korean bro. Today is 2022, July 11th. Tonight is Monday night and nothing special, right? So we'll just look at Yahoo Finance and Market Beats, okay? Hmm. Let's see. What articles do we have tonight? Hmm. First, let's look at marketbait.com. Here's how the dollar cost average into positions in the bear market. Let's pick some articles. Gas pipeline shutdown starts amid German suspicion of Russia. Hmm. Five below stock is a recession play. Hmm. U.S. futures lead with earnings season inflation data on tap. Over-the-counter birth control drug maker seeks FDA approval. Hmm. Five below stock is recession play. Here's how the dollar cost average into positions in the bear market. Levi Strauss proves resilient for dividend investors. Hmm. Elon Musk has turned Twitter into dead money. Morning brief. Stock futures sleep as earnings season approaches. CD strategy sees an 8% stock this year. Chinese stocks have worst day in a month on COVID fears. Three strong buy stocks are too cheap to ignore. Cybersecurity stocks to buy, sell, and watch amid the bear market. My friends and family say I'm rich. I'm 26 million. Hold on. If this stock market is shaping up like 2008, here's where we could be headed next. Bitcoin prices are sliding while two mainstream catalysts may move cryptos this week. Uh, should you throw in the towel on this once priced stocks? Here's what usually happens after 20% plunge. We're in a recession. Longtime bull Kathy Woods warning investors about the big problem in today's economy. Tech earnings are coming. 6 reasons to brace for even more pain. JP Morgan, Delta, Morgan Stanley, TSMC, and other stocks watched this week. 5 non-stocks watched and buy. Here are the fundamental and technical reasons why. Dividend stocks can help during recession. Here's what to look for. Bearish battery stocks really should consider shorting this week. US is lacking a key aspect of any recession. Elon Musk responds to Twitter's threat to sue him over re-managing on deal with a meme. Software growth stocks to buy. Watch or sell amid non volatility. Artificial intelligence stocks to buy and watch AI software market booms. Here, how to handle a baby market in retirement. Ford having some rally bad luck with its vehicles. Big banks report earnings this week. 4 things to watch. Stock edge lower. Week ahead. Twitter, Neo, and Uber. 5 things to know. U.S. stocks poised for lower open on Monday. Is Google a buy or sell as stock split approaches? Alibaba is tumbling. Chinese tech stocks have a new headache. American wedge stocks are cheap. They're about to get sales bump. Casino stocks, Twitter, and more Monday morning stock movers. 5G stocks to buy and watch as wireless firms move beyond smartphones. Room to pay fine in Florida over customer complaints. Other states are watching too. 2 cheap commodity stocks. It could be gold and Elon Musk moved to pull out a Twitter deal is bad news for the social media site. Elon Musk is walking away from the Twitter deal. Here's how it could still happen. Just how long is this bear market going to affect your money? Okay, there you go. There you go. There you go. What's okay? Let's see. First article: Elon Musk has turned Twitter into dead money. Why does he say it's dead money? Today's newsletter is by Brian Sozi, an editor at large and anchor Yahoo Finance. As my career has littered on, I have come to terms with one thing: rich, powerful people are going to do whatever they damn well please. The reason for that is pretty simple. They have the money, connections, and the ruthless aggression to foster whatever reality they do so desire. This might sound cynical, but I have seen it time and time again. Now everyone is saying it firsthand. With the words reached the person Elon Musk backing out of his $44 billion deal for Twitter late on Friday. So I know that he has something to do with Twitter, and the impact that he has on Twitter is so much, no doubt. Mm. Musk is terminating the merger agreement with Twitter because of what his team believes have been material breaches of multiple provisions in the agreement. Some of those provisions appear to include Twitter's recent decision to can about a third of its recruiting team and not providing Musk with what he views as accurate data on bots or fake accounts. Twitter chairman Brett Taylor tweeted the company will take this to the courts to get Musk to close a deal or have him pony up the $1 billion breakup fee. Taylor declined to comment to me on the unfolding series of events. On Sunday evening, Bloomberg reported that Twitter has hired the legal heavyweights over at Watcho Lipton to sue Musk. So it's pretty clear that things are getting really messy here. They even hired a lawyer or someone who can sue Musk. Something is not going in a direction. Hmm. A spokesperson for Twitter declined to make CEO Parag Aragwal available for an interview. This is a code red situation for Twitter and its board, as now the company will battle Musk in an elongated court battle to recoup the deal and break a fee of $1 million in a minimum. We see no other bidders emerging at this time while little proceedings play out in the courts. Oh, it's pretty big deal. Okay, I get it. Stock market news live up. Stock futures deep as earnings season approaches. U.S. stock futures pointed to a lower open early Monday as investors brace for the start of earnings season and fresh inflation data due out later this week. Contracts on the S&P 500 fell 0.5%, while futures tied to the Dow Jones Industrial Average shed 100 points, or 0.3%. Nasdaq futures is tickled down 0.6%. Twitter was in focus early Monday after Elon Musk backed out of his $44 billion before the social media platform late last week. So here's what he says. He backed out of his $1 billion bid. Musk cited material breaches of multiple provisions. In the agreement in his decision to terminate the deal, including Twitter's recent decision to axe some of its recruiting team and failure to provide Musk with what he views as accurate count on bots or fake accounts, shares fell as much as 6% in pre-market trading. It really isn't about the bots. Wells Fargo senior equity analyst Brian Fitzgerald told Yahoo Finance Live on Friday. This is Team Musk articulating for a lower price. Things are getting messy again in this article. Okay. Citi sees a surprising stock market rally into a year-end. As recession fears spoil on Wall Street, Citi says corporate profits may surprise many later this year. The stock market's performance should follow. We see room for U.S. equities to work higher into year-end 2022, triggered by more resilient earnings than commonly expected and potential valuation relief as Fed hawkishness is more fully priced in, said CD strategist Scott Croner in a new note to clients. Surprising stock market rally into year-end. We concluded the inflation surge beginning about this time a year ago has mostly been an incremental positive for earnings growth. Wait, does it say this rally could last till the end of this year? We do expect there are going to be earnings disappointments, but we do expect that there will be some remarkable surprises over the course of the next few quarters. So over the next few quarters, we'll have a lot of surprise. Okay. What surprise do we get? China stocks drop motion month on COVID flare-ups take fines. Chinese stocks had their worst day in about a month as a COVID resurgence combined with fresh fines for the country's tech giants sent investors running for the door. The Hang Seng China Enterprise Index, a gauge tracking mainland firms listed in Hong Kong, slumped 3.1%, its biggest loss since mid-June. Tech heavyweights, property developers, electric vehicle makers were among the biggest drags. A slew of bad news hit China's market over the weekend and Monday morning, including regulatory fines on past transactions done by Alibaba Group Holding Ltd. And Tencent Holdings Ltd., a rejection by China Evergrande Group's bondholders on a proposal to extend debt payment, and a warning by a prominent investor's wife that a key lithium maker stock is overvalued. Okay, whatever that is. Things are not going good in China as well because of COVID-19 combined with tech giants drop. Things are not going great. 3 strong buy stocks are too cheap to ignore. So what are the holdings? Artbass Corporation. Open Lending Corporations. What are they really? First up is Capri Holding, a fashion holding and retail company with a multinational reach. Capri has over 1,200 retail locations, including both standing-alone stores and in-store boutiques. The company carries and sells a wide range of high-end branded items, including apparel, shoes, and accessories, under the well-known names of Versace, Jimmy Choo, and Michael Kors. With the second stock on our list, we'll shift gears into the transportation sector. Artbass is another holding company, but this time in the transportation industry. Its subsidiaries are trucking firms working in the last-then truckload segment, a vital part of the shipping business. LTL companies move freight loads that are too big for parcel shipping, but not big enough to completely fill a semi-trailer. They move them on the full range of routes, from long out interstate to urban last mile. Trucking firm, transportation company, Artbass Corporation. And the last one we have is in Open Lending Corporation. In recent years, the automotive sector has found important support from customer financing, which has driven both new and used car sales and prices have declined. Looking forward, this support is only going to become more important, but also more complicated as interest rates rise. Our next stop, Open Lending, dwells in this sector. The Texas-based company provides a range of services for financial institutions and lenders, particularly automated loan analytics, risk-based pricing and risk modeling, and automated decision technology for automotive lenders. Open Lending operates throughout the U.S. and has been in business since 2013. The company went public in 2020. Blah, blah, blah. None of them has got to do with software, so I'm just going to skip on these companies, okay? Cybersecurity companies. I know a few of them. let's see whether they're included in here. Okay, what do we have? You may think the time is right to move into cybersecurity stocks as geopolitical events unfold and acquisitions continue. Hmm. We got Fortinet's. The IBD computer software security group ranks only number 57 out of 197 industry groups tracked, improving from number 122 one week ago. Meanwhile, Qualys ranks number 16. Uh, CrowdStrike Holdings, Okta, Zscaler, Checkpoint Software Technologies reported first quarter billings of $502 million, below analyst estimates of $532 million, sending CHKP stock down. It's not organized, so I'll just keep. If this stock market is shaping up like 2008, here's where we could be headed next as strategist. Let's see. Comparisons between 2022 and critical information for the U.S. trading day. Steve, should you throw in the towel on these once priced stocks? Okay. Oh, come on. I cannot read this article. Oh. Okay, here's what usually happens after 20% pledge. Okay. If there is anything to hang your hat on during the current bear market in stocks, it's that longer term markets tend to rebound very nicely. The S&P 500 has been hard 3 years later in 8 out of 9 caches, in which the index has fallen 20%. Or more from an all-time high going back to 1957. According to research from Choice Co-Chief Investment Officer Keith Learn, stocks have returned on average 29% during those 8 cases. Has been higher 3 years later in 8 out of 9 cases, in which the index has fallen 20%. Interestingly, stocks have also sharply regained ground a year after falling 20% or more from a high. Learner's data shows that S&P 500 has increased 15% on average. The 7 times stocks have attained 20% or more from a high dating back to 1957. Given the wide range of outcomes Leonard wrote in the note to clients, our view is that this is not the time to be aggressive, but we're also not advocating reducing equities for investors who are aligned with their longer term equity allocations. At this point, a lot of the excesses have been wrung out. So, expert also says that even if after having 20% fall, it rebounds back, and then at the end you will earn money. That's the point, right? To Leonard's point, investors have moved quickly this year to reprice stocks amid sky-high inflation and Federal Reserve locked and loaded on interest rates, right? Um, was something like that, blah, blah, blah. And what's the bottom line? This is actually a really difficult time to be thinking very long term. Yes, indeed. It's very hard to think long term. BlackRock Global Allocation Head of Thematic Strategy, Kay Moore, said in Yahoo Finance Live, we know that there are a tremendous number of cross currents right now in the market. It is not just monetary policy. It is not just monetary policy and the durability of inflation, not just monetary policy. It's also durability of inflation, but also kind of what is going on geopolitically, geopolitical tension. And monetary policy and the durability of inflation all mixed together, and then the result is now. Okay, let's go to market beats first, okay, and then we'll come back. Here's how dollar coach average into positions in the bear market. What does he say? Gas pipeline shutdown starts amid German suspicion of Russia. A major gas pipeline from Russia to Western Europe shut down for annual maintenance on Monday amid concern in Germany that Russia may not resume the flow of gas as scheduled. Okay, now the flow has stopped from Russia to Western Europe. The Nord Stream 1 pipeline runs under the Baltic Sea from Russia to Germany and is the latter's main source of Russian gas. Gas is usually sent onward to other countries as well. It is scheduled to be out of action until July 21st for routine work that the operator says includes testing of mechanical elements and automation systems. The operator's data show the gas flow dropping as planned on Monday morning. German officials are suspicious about Russia's intentions, particularly after Russia's Gazprom last month reduced gas flow through Nord Stream 1 by 60%. Gazprom cited technical problems involving a gas turbine powering a compressor station that partner Siemens Energy sent to Canada for overhaul and couldn't be returned because of sanctions imposed over Russia's invasion of Ukraine. Okay, so Kids pipeline shut down and the gas flow from Russia stopped. Okay, that's the point. Five Below stock is recession play. What is Five Below stock? Discount retailer. Five Below stock has fallen -1% on the year. The popular specialty value retailer sells everything from clothing, home products, candy, toys, games to household products, cosmetics, accessories for $5 or less. The company caters to consumers seeking a reprieve from record high inflation. Five Below is undergoing its triple-double strategy program. The retailer expects half its stores will be remodeled under the new Five Beyond format by the end of fiscal 2022. So it's gonna have another reformatting. Okay, the macro environment is expected to remain challenging with supply chain disruption, logistics costs, and inflationary pressures. As a lowered forward guidance for a year, the company plans to convert over 750 stores to a new format, which includes a store within a store concept with Five Beyond showcasing rewards and reimagine tech and doubling the SKUs. While the lapping of stimulus benefits caused many retailers to experience revenue declines. Blah, blah, blah. So what's the bottom line? Doesn't say anything about bottom line here. Over-the-counter birth control drug matrix FDA approval. Just how long? Just how long is this bear market going to affect your money? Bear market marks a time of uncertainty for investors. It's uncomfortable to watch your portfolio potentially free fall during a bear market, but knowing there is a light at the end of the tunnel can help. So, how long do bear markets last? Let's explore. A financial advisor can guide you in making smart investments for your portfolio in a bear market. What is a bear market? A bear market is when the price of securities in a key market index falls for a couple of months. The drop must be at least 20% to qualify as bear market. Okay, it's new information. So bear market, if market goes down, you just don't say it's a bear market. Bear market has started. Uh, if um, if the drop is at least 20%, then that's what you call bear market. Okay, it's not a short term correction, but a long term trend. It's not a short term correction. Sometimes you have a rally, right? It goes up and down, up and down, up and down, up and down. But it's not a short-term correction, but it's more like long-term trend. Mm. During a bear market, investors are pessimistic about the future of the financial markets. Generally, bear markets start rolling when there's a recession or high employment strikes. The fears of bad economy times on the horizon. How long? A bear market is rough patch for the economy. But even when things look bad, bear markets don't last forever. So how long do bear markets last? It can vary dramatically. 11 months. Okay, here it goes. So 1950 bear markets have lasted an average of approximately, it lasts about 11 months. On average, the 28 bear markets in 1928 have seen an average stock market decline of about 35%. Mm. The stock market is generally doing well. Before a bear market unfolds, investors are confident that confidence reflects in high stock prices, but as stocks price soar, therefore sharply due to other economic factors, some investors panic. Eventually, better economic times entice investors to re-enter the market. The re-entry marks a turning point towards boom. Too cheap commodity stocks that could be golden. Chinese tech stocks have a new head. Alibaba is tumbling. Chinese tech stocks were tumbling on Monday as two of the embattled sector's leading players faced fresh fines from market regulators over disclosure rules. So they had to pay fine. So because of that, it is tumbling. Mm. China State Administration for Market Regulations announced Sunday a wave of penalties for improperly reporting past deals in breach of competition law. Alibaba and Tencent were among the companies fined as a result. Okay. AI software margins. Nope, not this one. Okay, longtime bull Kathy Wood is warning investors about the big problem in today's economy. Here's three stocks she likes right now. Here we are in a recession. Okay, it's an interesting article. Okay, let's read this aloud. Okay, the official GDP estimate for quarter second won't be available until later this month. Hmm. But many experts, including our investor Kathy Wood, are calling for a recession. We think we're in a recession. Wood says in recent CNBC interview, we think a big problem out there is in inventories. The increase of which I've never seen this large in my career. I've been around for 45 years. The increase of which I've never seen this large in my career. Based on how markets are doing, sentiment is certainly bearish. The S&P 500 is down 19% year to date. Wood's flagship fund, our innovation ETF, tumbled by more than 50% during the same period. But investors are not giving up. I think the inflows are happening because our clients have been diversifying away from broad-based benchmarks like the Nasdaq 100, says Wood. We're dedicated completely to disruptive innovation. Innovation solves problems. Zoom video communications, Tesla, Roku. Tech earnings are coming. 6 reasons to brace for even more pain. We're now just days away from what could be one of the most important tech earnings periods in years. Brace for trouble. The cross currents are fierce. Interest rates are high and had headed higher. Inflation hit a multi-decade peak. Consumer spending has slowed, and fears for recession are growing. Meanwhile, we're still working our way through the pandemic. Supply chain issues remain. The dollar has hit multi-year highs against European and Asian currencies, creating a foreign exchange drag on earnings. And the Russian war in Ukraine rages. All of that triggered the worst first half by the U.S. stock market in more than half a century. The U.S. is lacking a key aspect of any recession. What is it? When we were younger, there was a point when someone told us that recession was defined as 2 consecutive quarters of negative GDP growth, as measured by the Bureau of Economic Analysis. Later, some of us learned that recession is in fact designated and dated by the National Bureau of Economic Research, who make the call when they see a significant decline in economic activity that is spread across the economy, um, and that lasts more than a few months. The variables the Bureau emphasizes includes income, employment, personal consumption, and industrial production. If there's any doubt that it's the NBER who's beyond official recession calls, then consider this statement from the BEA. So there you have it. Sad this exercise of defining recession isn't very productive. It's mostly just semantics. Software growth stocks by watch for sell amid nausea volatility. Come on, let's look at my one. Good one. Looking for buy timing, my watch list. Mm, Officer Paper Holdings Vive. Okta. What is this one? Veronian Systems. PRCH. Porsche Group. Cars. FISV. What is Father V? Let's go to profile. Payment and financial service technology worldwide. This was not Pat V course PD PSNY. Oh, at least there's so many stocks on my portfolio that it's hard to pick one. Pager duty. Pager duty. Pager duty. Pager duty. Where's Pager duty? Orbis is digital operation management platform in the United States, Japan, internationally. It's digital operation management platform collects data, digital signals from virtually any source of software-enabled system or device. Polestar Automotive Holdings. Polestar. This is not it. Where is pet-related software? Take Two Interactive Software. Two Interactive. True Banyan. True Banyan. True Banyan. Together with subsidiaries, provides medical insurance for cats and dogs on a monthly subscription basis in the United States, Canada, Puerto Rico, and Australia. The company operates in segments subscription business and other business, serves pet owners and veterinaries. The company was formerly known as Vet Insurance International, changed its names to Trupanian. Seattle, Washington. Trupanian. Okay. Okay, this is it for today, and I'll be seeing you guys tomorrow, okay? Okay, I have to look into this company named Trupanian. This company deals insurance for cats and dogs. By the way. Anyway, see you guys. Happy Monday now, okay? Bye bye.